I'm here with Mike Burns, who is a realtor here in American Fork, and we're going to talk about different ways that you can win the offer on your home. That was the topic that it was your idea, right, Mike?
Well, yeah, it's really the topic that I think everyone wants to hear about right now.
Definitely.
So we may as well talk about that and
Yep.
see if we can't help somebody.
Right. That's probably the biggest complaint and pain point right now trying to buy a home is everybody's worried about, well, am I ever going to win, or how long until I win, you know?
Yeah, that's the tricky thing. So, I mean, obviously for every seller, they want to get the most money they possibly can
Right.
in as quick a fashion as possible.
Yep.
So whenever I have a buyer that needs to get a house and they need a loan, my first step is always to send them to a lender and say, hey, figure this out, Zach.
Right.
And so what's your pre-qualification process like? Like, how long does it take for somebody, and what do they have to do?
Yeah, great question. So initially, it's basically a phone call with me. It can all be done online if you prefer, but most borrowers prefer to have a call with me. I take basic information such as the credit, income, everything that way. Go through their pay stubs and determine exactly how much you'll qualify for. That process can take, typically the phone conversation, looking over documents is pretty quick. So in a lot of cases, I'm turning around a pre-approval letter back to you and the borrower within an hour or something. Other days, may have a self-employed one. We're working on a few things, or there's some difficulty and it may be the next day, but that's probably a worst case scenario.
So anywhere from an hour to a day?
Yeah.
So do you have to get their signature in order to pull credit, or do you not pull credit? Do you just go on what they say, or how do you handle that?
Definitely have to pull credit to have a pre-approval, and that usually happens digitally. So I use an application software online, and so the borrower from the comfort of their home, either on a phone or a computer, can authorize credit pulls and everything else that way. So it's pretty much instantaneous. So theoretically I could have a pre-approval in 15 minutes, if everything was just lined up and and it was easy, which it never is, but yeah. And then as far as winning the home, I think the pre-approval is important, and that's why I go through a credit pull. I verify income, get bank statements for your closing costs and everything to verify up front, because that's going to allow you to have a stronger offer position when you're writing contracts. There's actually a difference between pre-approval and pre-qualification, which most people don't really talk about.
Yeah, you should explain that. I think it's important for people to know.
So the pre-approval is basically what I was saying, where you go through all of the income and credit up front. A pre-qualification is a lighter version, which is basically just you verbally tell me what your income is and everything that way, and I say, yeah, you should qualify for a $450,000 home. Whereas a pre-approval is I've gotten all the documentation and I've submitted for an automatic approval.
Okay.
And I've got actually a system approval that says at these terms you're good to buy.
Gotcha. Okay. Well, that's cool. Yeah. That's important to know. A pre-qual is not as valuable as a pre-approval.
Exactly.
Okay.
Yep.
All right. Well, that's awesome. Yeah, and once we have that in hand, we'll make an offer. And it's weird, different listing agents will feel differently about pre-approval letters or whatever. And so when we send an offer, we try to make it as strong as possible. And there's several elements that you can control inside of that offer. So one of the things you can do, you can take one of the things you're seeing commonly right now is non-refundable earnest money.
Right.
Which is a really aggressive strategy.
Yes.
So let's say you put $5,000 down, and if it's non-refundable upon acceptance, as soon as they say, yes, we accept it, you could find out that the house is going to fall down tomorrow, and you've lost $5,000.
Yeah.
So that's a scary one, but that is one technique people will use.
Yeah.
Obviously, same thing with the pre-approval. You want to make sure that's solid if you've got money that's non-refundable up front.
Yeah.
But on some deals, that's what it takes.
Yeah.
So, but you don't always have to do that, and not every buyer is comfortable with doing that, obviously.
Yeah.
When we do those kind of deals, we kind of do a pre-inspection with the buyer, and we are not home inspectors or anything else, but we have them look at it really closely. Because that's a scary deal. And so we try to be careful about that one.
Yeah, the hard earnest money and waiving the right to an inspection are two of kind of the scarier ones in my mind, where it's like you don't know what you're jumping into at that point.
No, and it's frustrating because it's like, well, here we go, just and you can waive things as long as you understand. My big issue is make sure buyers understand, because if you waive your inspection, you waive your financing, you waive your appraisal, well, you have no way out, right? Yeah. And the biggest challenge that people don't realize, they say, yeah, let's waive it all. Well, if you've waived every option of canceling, and you do cancel for some reason, or you don't perform, you can't, something comes up, you lose your job, who knows what, you've left yourself no way out of a contract.
Yeah.
And you could be held liable for damages if that seller ends up wanting to come after you, other than just the earnest money. So that's a risky situation, but at the same time, these people are doing what they have to do
right.
to get a place right now.
Yep.
And a lot of times that's what it takes. So
Yep.
you got the hard earnest money. You got waiving different things. You can waive the appraisal. If you've got enough cash to make up whatever the difference is on the
right.
appraisal, you can do that. But you got to be aware that sometimes appraisals come in $20,000 low.
Yeah.
And if that's the case, 30,000, who knows? I mean, you've got to have that cash, and that doesn't count towards your down payment. Can you explain why that is? Because people don't get that. They're like, wait, what do you mean it doesn't count?
Yeah.
Like, no, it doesn't count. So if you have a house that's at 600,000 and your deal's at 600,000, but it appraises at 570.
Yep.
How much down payment do they need?
Yeah, exactly. So if you were going to do a 10% down payment on your loan and it was a $600,000 house, then you would have needed $60,000 down. But the problem is when they're figuring your loan to value percentage on the loan, they're going off of the lower number out of the appraisal and the sale price on the contract. So whichever one's lower, you have to be 90% of that number instead of 90% of the higher. So if you dropped your appraisal from the 600 sale price to, what'd you say, 570, then now you just lost 30 grand, technically you have to go to 90% of 570.
Right, so you got to have 57,000 plus 30,000 to make up the difference.
Right.
Can that making up the difference come from somebody else? Could it be a gift to make up the difference? Does it matter where that money comes from?
Yeah, it can be, and that'll still be subject to different requirements based on which loan type you're doing, but it can be a gift. Okay. So there are different ways you can try to make it up, but generally speaking, I think if you're getting into that situation, you probably have the cash in the bank most of the time. But.
You better. I mean, we haven't even explored those options.
Right.
And that might be something worth talking about sometime in the future.
Yeah.
Cool. So you can waive rights. That's it. You can waive the appraisal. You can waive financing. You can waive due diligence. You can waive an inspection. Yep. I mean, and it's funny, due diligence is just this broad catch-all that's for inspections and community things and HOA evaluations. Yeah. And so that's one of the hard things on condos, where if you don't know the homeowners association, you may have a liability there. Like you can buy into a homeowners association that has all sorts of messes. Right. And so you've just got to be careful when you're waiving your rights. But it's possible. We do a lot of research in advance on an offer like that to make sure that people are protected as much as possible, even though they're going into it riskier. Yeah, and it sounds like you do have a lot of concern over if you're going to waive those things, that you're kind of looking out for your buyer in that case, and trying to help them double research where you can if you're waiving an inspection. You can check a lot of stuff out in advance, and so especially with homeowners associations, you can get those documents sometimes. And we've done enough transactions, it seems like we have documents on most places. We just pull them up from a past transaction, so we at least know 3 months ago what was going on in that association. Right. Maybe not today. Yeah. And but you try to be as safe as possible going into a very risky situation. Yeah. It's kind of jumping out of that airplane with not quite sure what your parachute looks like. Yeah, it's true. You didn't look at the parachute before you did it, so. Yeah. Do you think that most buyers waiving those contingencies, do you think most buyers have an agent that's looking out for them as much as you're kind of describing? You've worked on the listing and the buying, so I'm sure you've seen other interactions. I've done both sides. Yeah. Obviously, I would just hope that every agent does. Yeah. I know from past experience that not everyone does. Right. But yeah, there's a lot of great agents out there. Yeah. Just make sure the one you have is good. Right. I mean, I don't want to. Yeah. But you can interview an agent. You can find out how many transactions they've done and what kind of support they have. Yeah. And even an agent that hasn't done a lot of transactions, if they're on a team or something where they've got people that are actually looking over what they're doing. Yep. You'll be fine on that. But yeah, I would encourage people to look at what's actually going on with the agent and what they've done. Yeah. You just want to make sure you make good choices no matter what. Whenever you hire someone for a job, like you're going to go have a surgery of some sort. Yep. You'll probably check out the doctor. Yes. Make sure you're not his first. So yep. You never want to be the first brain surgery for a doctor. Yeah. And that's why, doctors, they have to work under somebody for a long time. Yeah. And agents, they don't have to. And so you can just ask the question. You can say, who do you work with? Who supports you? Who's going to be checking on your work? Yeah. Yeah, and not everybody's equal, but we could make it easy for them. We know that you have experience, and if they come to me as a loan officer, I'm going to recommend an experienced agent. So we both working in the industry will learn who we do and don't trust more than others. And it's funny. I was just reading an article about business in general, and it talks about over the long haul, you will be rewarded according to the value that you provide. Mm-hmm. And so we just seek to provide an exceptional value to our clients, right? So that we do the very best we can for them.
Yeah.
And when you're going into making an offer, you've got to know all of your options, and then you choose how many guns you're going to pull out and what you're going to use in that transaction.
Yeah.
If you go ahead and you try to pull out all the guns, so to speak, then you go for it. You know, you offer more than the asking price. You offer the non-refundable earnest money. You offer, and sometimes that happens on the 10th offer. Yeah, when people are just done.
And they just want to put it all out.
Yeah, so they're just going for it. And it's a tough market right now for a buyer. No question about it.
So you talk about offering over the list price, and I think most people know that's happening.
Absolutely.
But from like a general idea, if somebody's trying to buy a home right now and they want to be prepared, how much do you think is like an average that somebody would say, like, if I had this much to offer over appraisal, I would be pretty competitive?
Sure. That's a great question. I was doing some research this morning on a certain condo complex. So over the last year, there have been 18 sales that have taken place. Of those, they range from 30,000 over to 3,000 below the asking price.
Wow.
And so that's a really terrible answer to the question, which is to say, hard to say.
Yeah.
But if you know there's 20 offers on a property,
right,
those
are the ones that need a higher,
And so you just kind of have to decide what it's worth. So we try to go out and kind of look at it like an appraiser, try to figure out what's the best appraisal we could possibly get, and how strong do you have to be to get that property.
Yeah.
And it can be hard sometimes.
Yeah, and you probably do some homework where you could talk to a listing agent and find out how much traffic they're getting on something, and you might even have an idea: are we competing with 1 or 2 or 30?
Right. Yeah, and so part of an agent's obligation is to actually disclose what the status of the offers are. So agents do have to tell you how many offers there are, assuming they'll talk to you.
Right.
One of the frustrations we have is there are agents that just don't communicate, and when that happens, we're a little bit stuck and limited. But yeah, you can definitely find out what the traffic's like. I mean, we showed a house a few months ago, and it was actually it was a year ago, because I remember it was still cold, so it was about a year ago. And the line, so COVID was a thing, and there was a line to get into the house. They'd only let 3 groups in at a time, and it wasn't a big house. Yeah. And there was a wait for about half an hour to get into the house to see it. Yeah. So we knew that one was going way over. They ended up with, on that house, it was in Salt Lake, in a nice area, and it was like 60 offers that they had. And it went for $180,000 over the asking price.
Wow.
So it wasn't even...
Yeah, not even in the ballpark.
Not even close to being what they were asking. So you never know. You have to take it on a case-by-case basis. You research the area. You try to give the best understanding you possibly can to a buyer. And then you take your best educated guess and the amount of risk you want to tolerate as a buyer to get it.
Yeah, that makes sense. And it's definitely going to be how much competition's on the home. Would you say there's even trends in price ranges, like how much to offer over appraisal or might need to be offered over appraisal if it was, say, a first-time buyers in the 300,000 range versus 500 versus 900, you know?
The lower price range is more competitive. You figure at 300,000, 80% of the population will qualify. At 400, 70%. At 500, maybe 45%. You know, and it just drops down as you go up into the higher brackets. And so you won't get 40 offers on a house that you've got for sale for $1.5 million. Yeah. But if you have one at 300,000 that's actually a good value, you'll get 40 offers. Yeah. And it does come down to the value. You'll see properties that are listed just $200,000 over where they should be, just kind of with that attitude of
see what you can get.
Give it to us. And those will sit on the market, and they kind of make up what has kind of become the base level of the marketplace are properties that are just ridiculously priced. Sure. And then the good properties come and go quickly. Yeah. And so you have to be quick when you want to buy one. They're going to be gone within 3 days, usually over the weekend or whatever.
And the lower price ranges being the more competitive ones, from what you're saying, that really continues to kick the first-time buyer.
Oh,
who's already struggling to put this together. But there's still other things we can leverage, fortunately, to try to help them. But so we talked about offering over the list price. We talked about waiving some of the contingencies. Are there other creative things that an agent or agent, loan officer, buyer together could do to help them leverage the offer and win?
Well, number one, having a really well-written pre-approval letter. That's going to help a lot. And then if they possibly can come up with the cash. So there's a lot of different ways to do that as well. Yep. Have you done any delayed financing?
I'm familiar with that. It's getting more common now,
So I think that's worth, my understanding of delayed financing, correct me if I'm wrong, is basically you get cash somehow from somewhere. Yep. and you go ahead and purchase the property and you immediately refinance the property. And on the lending side, it's treated like a purchase, right?
Yeah, more or less a purchase. If you're within 6 months of your purchase, that's when it's technically called delayed financing. And you have to meet, a few little criterias, but that's the majority of those scenarios. And so there's a number of ways people are doing that. They may actually have the cash, and they're doing that and then just repaying themselves with delayed financing.
Yeah.
Or they might be getting it from a hard money lender, just an individual who has the cash that they're willing to front for a short period of time. And then now there's even people in the real estate industry and in the lending industry that are kind of getting behind this. And the mortgage bank will front the money for the property as a cash close. And then, under the assumption that if for some reason you couldn't close your delayed financing, they would just own the home. And they could either rent it to you, or they can now sell it and do what they want. But so they will take a short-term gamble sometimes.
Yeah, and that's one of the things we always have to talk to our clients about, because there's risks with that. You could be just fine the day of closing, lose your job the next day, and then it's all a mess. And so it is risky. Yeah. It's always nice if you've got family. What you really need, everyone needs a rich uncle. That's the best thing you can possibly have.
Yes.
So, and knowing that most people don't, the reality is that we can work with you wherever you're at to give you the best possible shot.
Yeah.
And being well qualified, having that pre-approval letter, and making sure that you've written your offer as well and as riskily as you're willing to do.
Right.
Puts you in the best possible position.
Yeah. Every offer is going to be different, so both the buyer and the seller are going to have things that they can and can't do. So you can kind of leverage those. Even if you may not have the most cash, sometimes you can leverage other things that the seller's really interested in.
Yeah, and a big one right now is leasebacks.
Yeah.
So if you're willing to wait to move in, and you're willing to give the seller 59 days to get moved out before you move in, that works with the loans in general, right? As long as it's less than 60 days.
Yeah, exactly. Yeah, you got that 60-day window you can play with, so use it to your advantage.
Yeah, absolutely. No, we had some people that won in November last year, and that's exactly what they did. They said, hey, you know what? Rent back from us for 59 days, totally free.
Yep.
So they had to make that payment. They had one payment that came due obviously during that time, and they weren't living in the house, but they got the house.
Yeah.
And you just figure, well, if you're basically spending whatever your payment is extra. If your payment's $2,000 a month, then you paid $2,000 more for the house to give them that free rent.
Yeah.
And that's a small price to pay if you can make it convenient for a seller.
Yeah.
Sometimes if there's things the seller doesn't want to move, and you're willing to accept that garbage, if it is garbage, that can also be a helpful thing. So we sometimes will talk about that with a seller and say, well, if you don't want to have to move all your garbage, leave it. We'll clean the house out.
Yeah.
And sometimes that's attractive to a seller. You just have to try to figure out what it is that they really want. And if you can make the seller's life as easy as possible, sometimes you're better than cash.
Yeah.
If you're making their life easy.
Feel free to leave that 59 Chevy in the backyard. We'll take care of that, right?
Sure. Exactly. It's usually not a 59 Chevy. It's usually like an 83 Nova. And it literally is the Spanish translation of it's not going anywhere.
Yeah.
So got to winch it out of the dirt and go get it somewhere.
Rusted apart.
When you're a buyer, you kind of need to brace yourself when you're getting started. You're going to go between one in the dream world offer and as many as 10 offers to get a place accepted. It's no small feat, especially if you're looking at a high demand area. If you're along the Wasatch Front, that's a high demand area. Yeah. And so you have to be prepared to just do what you have to do and brace yourself.
Yeah.
Just be okay with the fact that it's going to take some effort to get a home. And that's not a problem. We do it every day. We're happy to do it.
Yep.
And I've had clients that feel really badly. They're like, oh, you're doing so much work. It's like, you know what? The toughest thing about my business is that sometimes it's easy and sometimes it's hard. And we just hope it all averages out enough that we're able to feed our families.
Right. It'll all work out in the end,
Yep, and it usually does.
So you might win the first offer, but you might take 10.
You might take 10,
So just kind of prepare yourself mentally to put out some offers. You may not win them all. And then if you win the first one or the second one, be happy.
Yeah. You never want to offer on a house you don't want. That's the number one thing.
Yeah.
But, if you want a home, go for it. You know, you can't just step back and not go for it. You got to try. So anyway, the fact of the matter is that we're here to help, and that's what we do. So just
ask us if you have a question.
Yeah. I'm Mike Burns with Whitman Burns Realty. You can reach us at 801-836-6683.
Yeah. Perfect. So Mike here at Whitman Burns Realty, and I'm Zach Stiles. You can find me at mortgagezac.com, and it's just ZAC. You can also reach me at 801-960-8258.
There you go.
But this has been a great video, very informative. I really think people are going to gain a lot of insight into the buying process from
I hope so. I mean, we're just here to help. So, but you're always going to have questions. So never hesitate to call Zach or myself. We'll just get you started and point you in the right direction.
Yeah. Great. Thank you. And be sure to like and subscribe to this video if you want to see more content to help you buy a home.
Can never go wrong doing that, I guess. Thanks,
All
Zach.
right.